Hello, welcome back. This is Si Wing Yi, and today I'm going to share a great information, very timely information from Redfin once again. And the headline is today is April the 20th, 2023, today's recording. And the headline is Housing Market Update. Home prices drop 3%, but monthly housing payments hit record high as mortgage rates take up. Speaking of rate, so I will share this with you. The Mortgage News Daily, today's rate has decreased slightly to 6.67%, which is minus 0.08 basis point from the previous day. So this past week, the mortgage rate has been as low as a week ago, as low as 6.39% to as high as 6.75% yesterday, to now 6.67%. The mortgage rate has been very volatile recently, but if you look at this year, up year to date, as we began the year 2023 around 6.45%, then everybody got really excited back around February of 2023, a few months ago, when the fixed rate mortgage rate was 5.99%, hitting the 6%, getting under the 6% threshold. So they got a lot of people excited, people lock in the rate and cause a lot of activities in the marketplace, especially mortgage applications. Then since February the 2nd, the rates came all the way back up again. And then we have seen as high as over 7%, 7.1% back March the 2nd. And since then, so that caused a little bit of concern. Then the rates came down throughout the next few weeks, all the way down to as low as 6.4% a couple of weeks ago. Now back up to 6.67%. So compared to last year over year, April 20th of 2022, the mortgage rate were 5.27%. So over the past year, the mortgage rate has increased 140% basis point, 1.4% higher from a year ago. And suffice to say, the mortgage rate has been very volatile lately. It would be an understatement. That said, let's get back to the Redfin update here. Let's begin the article. The Redfin says, despite high housing costs and a limited supply of homes for sale, many people are out house hunting. So just people are still very motivated to house hunt, but there's a lot of challenges ahead. Now, pending home sales were down 19% from a year ago, and it has been the biggest drop in nearly 3 months. And mortgage purchase application declined 10% over the last week because of the higher rates increases. Buyers are also limited by the shortage of homes for sale. This is a lingering problem which I believe we expect to see for the foreseeable future. And with new listings down 21% from last year as homeowners stay put to hang onto their comparatively low mortgage rates. So while fewer people are buying homes, many are still searching. Okay. And home buyers are window shopping, and many are entering the store, but few of them are making it to the cash register yet, says Redfin Deputy Chief Economist Taylor Marr. He said there's not much on the shelves to choose from, and the high mortgage rates and still high prices are making homes too expensive for many buyers. Some buyers are discouraged by mortgage rates rising this week, of course, which is partly due to a stronger than expected bank earnings, making it more likely that the Fed will hike interest rate next month. The market looks different in different parts of the country. Of course, every local market is different. In fact, it is hyper local market difference in all over the U.S. Having said that, Redfin I could only share data based on the national situation, national housing market. So what's really going on is the first-time home buyers are still very motivated to hunt for homes. And however, although there's enough demand, although demand has subsided, has decreased as a result of the rising mortgage rate past a few weeks, but the supply is so limited that many markets in the country are still seeing multiple offers, bidding wars. And as a matter of fact, especially with the entry-level homes, almost every good market. Look, I live in the San Francisco Bay Area, and my realtor, Tony Bruno, we did a video last week, and he has 5 listings, homes in Fremont, California, on the East Bay of the Bay Area. Typical average price of about $1.5 million. And he's getting multiple offers. He's getting 5% above asking. He's getting around 3 to 5 offers per house on his listings. And I've been talking to a lot of my network realtors in other markets as well, in Florida and in Texas. Same thing. Entry-level homes that are below the medium price in those particular markets, they are flying off the shelf. There's a lot of competition, but there's lower end homes, and that's what's happening. In spite of the mortgage rate being elevated, there are still ample buyers out there. Just to share with you what's going on. All right, let's get back to this article. Home prices falling in more than half of the U.S. The median home U.S. home sales prices fell for the 8th straight 4-week period after more than a decade of increases. But home prices sell year over year only a several percentage point, nothing to be concerned about, but still, technically, it is a decade record median price home sales falling. So home sale prices dropped in 30 of the 50 most populous U.S. metros, with the biggest drop in Austin, Texas at 15.1% year over year, and is followed by Oakland, California at minus 11.5%, Sacramento minus 9.5%, San Francisco minus 9.2%, and Seattle minus 9.1%. So no surprise, the western region of the U.S. has gone through lots of home volatility, reduction of prices over the past 9-10 months, whereas in other part of the country, in the Midwest and the Southeast, their markets has been doing pretty well. Their prices are increasing, believe it or not. East and Southeast coast, the area, the home prices are very stabilized or increasing, as a matter of fact, whereas the western region of the U.S. prices have decreased over the past year. Getting back to this, and giving the rates have increased slightly over the past week, we expect to see mortgage applications going to be reduced once again moving in the next few weeks. So everything, all the data I'm sharing with you is a lagging indicator. So just keep that in mind. So yeah, Google searches have reported the homes for sale. Searches up 43% since last November. However, it's still down 17% from a year ago. So the key takeaway for the housing market, according to Redfin, for 400 U.S. metros, at the median home prices was at $366K, down 2.6% year over year. That's the biggest decline in more than 10 years. However, in case you have not noticed, for the past couple of months, all over the country, the housing prices have increased by around 5%. So just goes to show you, it's a very robust market right now due to very low inventory. And these kind of trends continue to be very disturbing because look at right here. Pending home sales were down 19% year over year, the biggest decline in nearly 3 months. So what's so strange is springtime right now is April 20th. April of every year, due to seasonality, it's supposed to be a very robust housing market every year for a long time. And yet we're seeing downward trend in terms of homes available for sale, listings, pending sales, active listings. Everything has been decreasing, which is counter than in past years on a historic basis. So the trend that we're seeing is very disturbing. Yeah, this is a very unique spring market, 2023. So not only that, pending home sales fell pending home sales fell in all 50 of the most populous U.S. metros. They declined the most in Oakland, which I live in the East Bay, very close to Oakland, as a matter of fact, for all these years. So I see firsthand what's going on in the San Francisco Bay Area. Oakland fell 42.3%. This is absolutely shocking. Pending sales. Las Vegas has decreased by 42%, Portland 41%, Seattle minus 41%, San Jose minus 40%. So pending home sales, there are very extreme, insufficient inventory levels of supply in this Western region markets, as I indicated to you, in California and the Pacific Northwest. The new listings decline in all 50 states. Again, Oakland, Seattle, Sacramento, San Diego, and Riverside, California. So there are very few people are putting their homes up for sale. So new listings are projected to be much lower. So it is another major concern moving forward with the demand and supply situation. The months of supply, which is a measure of the balance between supply and demand, calculated by the number of months it would take for the current inventory to sell at the current sales price, was at 2.8 months, up from 1.9% months a year earlier. 4 to 5 months of supply is considered a balanced market. Now we're seeing clearly, still technically, today as we move forward, is a strong seller's market. 2.8% months of supply for April 2023. So because, in my opinion, because of continuing pending sales, the massive increases and decreases in active listings, increases in new listings, I expect in the next few months and even longer, the supply of inventories could be less than the current 2.8%. Okay, so this is, again, a very disturbing trend, to say the least. Further, 47% of homes that went under contract had accepted offers. Half of all the homes that were listed for sale, they got an offer within 2 weeks. Just to show you the multiple offers and bidding war situations that's happening all over the country, especially at those entry-level home prices. Home that was sold on the market had a median price of 35 days, the shortest span since November. All right, so let's go over the graphs, and then we should conclude this short presentation. Again, the median price sale decreased 2.6% year over year. However, you look at this orange line, which is this year, 2023, we have seen systematic increases in median sales price, as you can see, right? It started out the year with about $350 median price for the country. It had a small dip the first month until February. Then from February, starting from February on until now, February, March, April, for the past 3 months, we have seen increases in the median sales price, which is catching up with 2022 as well, which is, so home prices are increasing due to pent-up demand and lack of supply of inventory. So median asking price went up 0.4% year over year, as you can see. So we can see that this year are matching up very well, very competitively with their strong first half of last year, 2022, in terms of median asking price. Home buyers' housing payments are higher by almost 12%. So the mortgage payments are higher than last year. So that means the home affordability is continuing to be an issue. More and more people are being priced out of the home purchase market due to the higher mortgage payments and a higher interest rate and all that. So that's really a very big challenge for first-time home buyers out there. The more the home prices gets increasing, the higher the mortgage rate, then will reduce the home affordability for a lot of the first-time home buyers out there. As I mentioned earlier, pending sales minus 19%, new listings minus 21%. As you can see, it's just not a good sign. Again, homeowners are locking in their historically low mortgage. They're not willing to give up their 3% mortgage to move up to a 6.5% mortgage. So that is not a good motivation for current home buyers. All right. So my takeaway is that we have continued to see a challenging market. Home sellers are staying put. They're not willing to move up to the next level because of the elevated mortgage rate. We still, even though the pent-up demand has subsided to the higher mortgage rates, but still, there are more home buyers than there are sellers. More demand than their supply of homes. So we can continue to see multiple offers and bidding wars for the foreseeable future unless something significant happens between now and then. So there's my takeaway. To hear from you, what's your takeaway? Please comment below. What market you're in? Are you seeing multiple offers in your situation? Or are you seeing what kind of market? Because any market is very different. I'd like to hear from you. Where are you watching from this video? And also, if you see a lot of value from this presentation, from this video, please smash the like button and subscribe to my YouTube channel. And also, I'm a real estate investor. If you put your email into my website database at the bottom of this description, so you can receive weekly email newsletters concerning real estate investing news for my real estate investing club. All right. Hopefully you receive a lot of value. Thank you so much for watching this, and I will keep you updated about urgent housing market information. And also, again, once you become a free member of our real estate investment club, you will receive great information about real estate investing, about buying investment properties out of state and buying turnkey properties, and a lot of great free educational information. Thank you so much. This is Siwen Yi. Have a nice day. Thanks for watching. I'll see you next time. Bye-bye.